But today is also a reminder, Keith, that the COVID cases are rising, the lockdowns are rising, restrictions. New York City talking about closing indoor restaurants again after what we saw out on the West Coast. How much news like this can investors handle? I get it. We can look to the vaccine. We can look to next year when the economy is going to rebound and recover. But how much bad news economically can the market handle at this point?
Well, I think what you're seeing play out today, Sarah, is exactly as you're saying. There's a battle being waged right now. The uptick in cases, hospitalizations, and deaths across the country versus, a vaccine coming and a relief bill coming out of Washington, D.C. I think it's instructive to look at how the price action in the market today. If we're really concerned about massive lockdowns across the country, we'd see a much more dramatic pullback, especially in light of the fact that we've been overbought in the market since the second week in November and have been expecting a pullback. So if you have that kind of frothiness in combination with people really very nervous about an economic slowdown of an immense proportion from massive lockdowns, you'd see a much greater sell-off. So I think that, we'll probably see this. December is usually a very strong month. We'll probably see investors and traders try to hedge their bets, keep an eye on what's going on with the vaccination rollout. Thursday's a critical day for that. And also what's happening in Washington. And listen, big major cities like New York and big population centers like New Jersey are so far holding the line and waiting to see what happens. We'll probably know more next week to see if we have empirical evidence of spikes in cases from the Thanksgiving holiday. And that, of course, could change the calculus inside the market. And we could see a pullback to neutral ratings, which for me would be around 3,600 on the S&P.
Shepard Smith here. Thanks for watching CNBC on YouTube.